We've had some big breaking news in the renewable energy, clean energy, uranium market that has been absolutely amazing. And that's with Sprott, the Eric Sprott, billionaire commodities investor. His company, Sprott, actually getting involved in the uranium market in a very unexpected way. And it's about to get very exciting. And so today, to give us an update on what's going on in the market, we have my good friend, Mr. Justin from Uranium Insider. Right there down below, you'll see the link to sign up to Uranium Insider newsletter. I am a paying member of it. Absolutely love it. You get breakdown on some of the top uranium stocks to buy and overall updates on the uranium market. So you'll see the link to that in the description and pinned to the comments. So go ahead and check that out. Make sure you hit the like button on this side or this side, wherever you might find it, to send this out into the YouTube universe so more people see this video. Give us a comment down below that says "Go Uranium Go." Right there down below, comment down "Go Uranium Go." Last but not least, just a shout out to our channel sponsor, which is Vizsla Silver. So if you are into gold and silver, be sure to check out the mining stock Vizsla Silver. And without further ado, we have the Uranium Insider himself. How are you, Justin?
I'm good, Jake. Yeah, doing really well. How about yourself?
I am doing pretty good, and it's been exciting to watch this because, we on this channel we've discussed the silver squeeze, and that's this idea that there's a relatively finite amount of silver, and that if there's enough pressure on the supply and demand fundamentals, it could send the price absolutely sky high, right? And that's always probably the best way to pick our investments, especially in a time when everything's so inflated and so distorted in price versus value, is finding something with a black and white supply demand fundamentals. And that's what's always attracted me to uranium. But now we've heard that Sprott is getting involved in a major way, pretty similar to what they have in the silver market. They have the Sprott Silver Trust, and they're one of the biggest holders and buyers in the world. I forget how many hundreds of millions of ounces they have. And the uranium market is far tighter than the silver market. And Sprott's stepping in right now to pretty much do the exact same thing. Very exciting because we should see the price moving. And I'm thinking that my uranium stocks I might be retiring in my early 30s here. So I'm pretty excited.
Yeah, I'm pretty excited too, honestly. As soon as I saw that news, it was immediate what the implications would be. And so one point that I think needs to be made is that in the past 6 months or so, actually for the past several years, the real contrarian funds you've seen buy into private placements pretty frequently. So that's been Haywood has been one that's been in there for years and buying pretty big, and juniors and mid caps and pretty much all across the space during these equity raises. We've seen Haywood, Canaccord, TD, Red Cloud. I know I'm missing a number of securities that have really gone in pretty substantially, especially in the last 6 months. Every single equity raise, we'd see more and more bought deals and fewer private placements that went out to retail. And we haven't seen Sprott in there. Where is Sprott? Sprott has been entirely absent in the uranium trade, with an exception of they did one deal with Fission last year. I think it was 30 million, if I recall correctly, last March, April, somewhere around there. And they just did another deal with Fission, of course, after this announcement. So I think that Sprott recognized the risk reward setup in uranium. They finally came around to it. They recognize that they have missed the boat, and they don't have any exposure other than maybe some buying that they might have done in the open market. But Sprott's not really. They get into the placements. They get the warrants. They go and they get the discount. They come in with the big cash, and that's how they do it. And so they've basically been almost entirely absent, with an exception to those couple of Fission deals. Well, lo and behold, now what we have is a major development that Sprott will now be managing Uranium Participation Corp, which is a physical uranium fund. And to your listeners that don't already know this, UPC, Uranium Participation Corp, is their sole purpose is to purchase physical pounds from the market when the stock is trading at a premium to NAV, so a premium to the net asset value, or the actual value of the physical pounds they're holding based on the current spot price. If the stock is trading at a premium to that, their prospectus is that they are to issue shares at that premium, raise cash, buy more physical pounds. Conversely, if they're trading at a steep discount to NAV over a long enough period of time, and if the market structure dictates that it's a smart move, they could actually sell pounds into the market as well and buy back shares. So far, it's only been the other side of that. It's only been on the buying side. Recently, we've seen a number of producing companies, non-producing companies, Yellow Cake, all come into the market to buy pounds. So Yellow Cake executed their 2021 option with Kazatomprom to buy $100 million worth of uranium from Kazatomprom. They actually raised $140 million. So that additional $40 million will be for purchasing from the spot market. We saw UEC come into the market, Denison come into the market, Encore Energy, Boss Energy, Uranium Royalty Corporation. And of course, Cameco is a pretty consistent buyer as a producing company. But Uranium Participation Corp has been absent from this rally into the spot market by all of these other companies. And it's left investors sort of scratching their heads. What's going on here? UPC is trading at a 10 to 20% premium to NAV for the past, at least 2 months, probably longer than that. Probably more like 3 months, maybe even longer. And they have yet to do a raise. Well, they actually just announced it after the Sprott announcement. They're raising, I think, 70 million plus a green shoe. They'll probably end up at 80 million raised. But investors were really just kind of wondering what the hell's going on. Why aren't they issuing shares, raising and buying physical? Because Kazatomprom just did it. All these other companies did it. Denison did it, 2.5 million pounds, and they were the manager of UPC at the time. So it's kind of like, all right, why is UPC not doing this? But the manager of the fund, Denison Mines, is buying physical pounds. Well, now we know why. UPC has been working on this deal with Sprott. Sprott is probably the most well-known in the resource space, period. Like you mentioned, they manage other physical funds, a silver fund, a gold fund. I think they have a silver and gold fund, and then they also have a platinum palladium fund, all of which hold these physical metals and trade on the New York Stock Exchange. So this new vehicle that's to be called Sprott Physical Uranium Trust will seek out a American listing. They're going to be on the New York Stock Exchange. And importantly, they're going to be applying for ATM financing, which they will get. This is going to be largely, or expectedly north of $1 billion of ATM financing availability. And what the ATM is at the market. So it allows the company to issue shares at will, raise cash, buy physical. It's hard to describe how big of a deal this is, especially when we understand how thin the spot market is. And we have actually a pretty good understanding at this point. Are there pounds out there in the world that are mobile that will become more available as prices rise? Of course. But as it is now, Denison came into the market for 2.5 million pounds. That transaction was executed over 17 separate transactions to get 2.5 million pounds, over 12 different entities, with delivery out 6 months. That's not a lot of uranium sitting around. It just isn't. So now we have this entity, Sprott, highly, highly competent, going to be trading on the New York Stock Exchange, going to have the ATM financing available, and it will be attracting, I guarantee you, it's going to be attracting major fund, hedge fund, institutional money that are going to be buying this stock on the open market, squeezing the physical. It's an unbelievable development, and it's huge, and it's so good for the uranium investing space. It's not that good for traders and utilities that had hoped perhaps to buy more uranium on the spot market, but it's going to result in higher prices, and it's going to result likely in utilities completely leaving the spot market, or mostly leaving the spot market, and going to have to acquire their pounds elsewhere, ideally in the mid to long-term market from actual producing companies, which is what we've been waiting for forever.
Okay, so a couple questions. No, first a statement. So Sprott is basically the Berkshire Hathaway of resources. For maybe someone that doesn't know, would you agree with that statement?
Yeah, for sure.
So that's what we have coming. So now a couple quick questions is the 40 million, you said there was 40 million left over from, I believe you said from, I
Yellow
don't know
cake.
if Yellow Cake. Okay, so that's still on the table, money on the table, waiting to buy spot market.
I believe so, yes.
Yeah, so that's a lot. And then you said UPC took 80, so that's 120 million. So when you say $1 billion for ATM financing, that means they can put $1 billion into physical uranium, or what did that mean exactly?
Well, eventually, yes, but that means that's kind of the ceiling of their ability to raise through the ATM financing incrementally.
Got
So
it.
it wouldn't be just like they'd come in for $1 billion. It just mean they can just issue shares over and over and over and over. And it's probably going to be more than that. I mean, in this type of market with the funds that are going to be flowing, once the prices start to move, that are coming into this stock, into the Sprott Physical Uranium Trust, it's going to be huge. So I
So
wouldn't be
this is
surprised.
how the big money will play it now. They'll go
Exactly.
through Sprott on the New York Stock Exchange.
Yes, that's been the thesis for some time now, is that funds are positioning the equities and eventually they'll come in to buy physical. We just didn't really know how they were going to do that. This is so much better now because now funds can buy this highly liquid, highly trusted security on the New York Stock Exchange without having to hold pounds on their books. So they can put tens of millions of dollars invested into the Sprott Physical Uranium Trust stock, and it will have a direct relationship to tightening the spot market, moving up the price, and therefore moving these funds that are buying this uranium trust, their other equities that they're holding, that they've been establishing themselves into over the past 6 months. It's brilliant.
So, I mean, how important is this? I mean, how much has this quickened the time frame for this market to go ballistic? I mean, we've got Kevin Bambro, he was a the big guy during the last market that said, "Hey, look, we got to get involved in uranium." He was at Sprott, retired now, and he says he thinks. I mean, this is a hardcore professional that's managed however many hundreds, millions, or billions of dollars in the resource space. And he says he thinks this is going now, over $200 a pound, which is quite a number for, someone as professional and as seasoned as he is. But it starts to make you go, I mean, is this about to be the most, I mean, it's amazing. I mean, it really is. It's hard to grasp. You've got this market that doesn't have a lot of uranium. All of a sudden, one of the most respected natural resource companies in the history of the world is coming in basically with the ability to scoop up everything and basically drive the price seemingly wherever they want in a very quick period of time.
Sprott controls the uranium market now. I don't know what else to say. There's no other way to say
Yeah.
it. I mean, not yet, but they will. I mean, they're going to control the spot market, period. And they want it to go in one direction. And what we're going to see between now and when this new company is formed and listed on the New York Stock Exchange, and they start buying physical, we're probably likely going to see Sprott positioning themselves in the equities. We've already seen that second raise that they did with Fission. Just last week they announced that. So I wouldn't be surprised if they're buying into the open market as well. But we should start to see them show up in placements over the next, let's say, 6 months. The deal is supposed to go through end of Q2, early Q3. That's pretty fast. I imagine it's possible. It's going to take a bit more time following that to get on the New York Stock Exchange and get the ATM financing lined up. So in my opinion, now until then is basically our kind of last opportunity to get in at these prices, in my opinion. Of course, barring a broader market correction that could bring everything down. which bring it. I mean, why not? Why not have better entries here before we know exactly what's coming? To answer your original question in that string of questions, I would say that this has quickened the thesis substantially and made it far more bullish as far as price trajectories. So to kind of segue from that would be Larry McDonald's Bear Trap report, which was the report that came out on December 3rd that originally kind of lit the fire into the sector over the past 6 months. He came out with something the last week of April, another report. Here, I'm just going to read a couple of snippets from it because I have it right in front of me. Uranium, once in a century opportunity. And he goes on extremely, extremely bullish, basically saying that all of these things are lining up, including the White House, which has announced that they're considering subsidies for nuclear power. Yeah.
And what would be the implications of that?
Nuclear power plants that are potentially on the chopping block due to lack of profitability in competitive energy markets could be getting subsidies from the federal government to remain in operation. It's huge. It's now acknowledging that the federal government sees nuclear power as an essential clean energy. That's basically what it means. Mm-hmm. Of course, there's other plants that could still be on the chopping block for local political reasons more than anything. We just saw the one in New York. Indian Point just closed down last week, which is a total shame. That was attacked by environmental lobby for years. And we also have Diablo Canyon in California, which I'm not holding my breath for California. But besides those two, any other reactors that are actually kind of in dire straits finance-wise could be getting the support. The other thing it means is, there's this thesis that the nuclear fuel buyers will buy uranium at any price, and technically they will, but that it doesn't really matter to them because it's such a small percentage of their overall operating cost. And that's not exactly true. Obviously, bottom line matters, and the more they pay for fuel, it affects their bottom line. So a lot of these reactors that are in deregulated markets and have to compete with natural gas energy have a hard time of it. They have to compete. They have to compete on price. And so, but what this does mean potentially is that these reactors in the US that will be paying higher prices for fuel in this next cycle could get support from the government to do just that. So that's a big deal. Okay, so back to bear traps. 1 week later after the Sprott announcement, let me read this intro paragraph here. Our copper thesis has played out nicely, but from a Washington policy perspective, uranium is the next trade. This is a large deal, game changer. A lot of hedge funds in our chat are discussing. So Bear Traps report goes out to a largely institutional audience, very well respected, very highly read, large membership. Larry McDonald, very highly respected gentleman in the space. I think uranium prices double over the next 12 months. Those are his words. High conviction. It's the pure centrist green energy play, nuclear power. He goes on 2 more pages of unbelievably bullish language, highlighting the Sprott development in that second report. I don't think uranium prices double in 12 months, but I could be wrong. But I do think now where I was like, yeah, I think we'll see high 30s, maybe low 40s by the end of the year. I think that's a practical guarantee. I think that as soon as Sprott is set up here, they're going to start doing what they're doing. And between now and then, Cameco has a substantial amount of buying to do. I believe Yellowcake still needs to buy that 1.3 million pounds with that spare 40 million. Because Atomprom actually just came out with some numbers on their Q1 last week, and they were down in their production. I think it was something like 14%. That was actually expected, but it could mean that they have a bit more buying to do in the spot market. And then, of course, now this news is widespread about UPC being run by Sprott. I think that we'll see the equities at the very least be supported by consistent buying. Whether or not it's a moonshot from here, I don't necessarily think that, but I think that now uranium is on the main stage because of Sprott, and it's basically game on.
Do you think that all those people will try to jump in and buy out of the spot, knowing that Sprott will be coming in pretty soon, and that could affect the prices they're buying at, such as Cameco and such?
I think so. Yeah. I mean, I'm certain that Cameco, whatever buying they need to do still, which I believe is still probably somewhere between 6 and 8 million pounds, they're likely to try to get that before Sprott comes in, because Sprott, once the money comes into that stock, they're basically, how would you say it? They're going to be buying at the price at the
Let
price.
me rephrase it for you. They're going to be cornering, basically legally cornering the entire uranium market is what they're going to be doing. And they're basically going to have unlimited money to do so and overpower any other agendas.
Yep. Agreed. Yeah. I don't even know what else to say. It's just huge. It's huge. So now is the time, if you aren't positioned, to get positioned. Now is the time to do the research, to figure out what vehicles you want to be in to ride out this market. I do think that this market is going to go to higher levels than I previously thought. Kevin Bambrose saying $200 or more. I don't know. That's possible, I suppose. It's not going to be driven anymore by the utilities buying. It's just not. The whole thesis of the utilities buying will bring us to that $65 to $75 thing. That's out the window. The spot market is going to go to whatever price Sprott wants to take it. That's where it's going. And the unfortunate thing for the utilities that they've waited this long is that the producers are going to be signing contracts that are at least partially spot referenced. They're not going to be doing only fixed. They're not going to be doing only fixed term contracts. They're going to have partial 40%, 50%, 60% spot reference. The utilities are going to have to pay it. They're going to have to pay that spot reference portion at the time of delivery. Who the hell knows what price that can be at?
So I guess the question is, what price does Sprott want the price of uranium to go to?
Yeah. I mean, I think it's going to overshoot far beyond what is reasonable and logical. Let's just say that. I don't have a price target. I don't care about price targets because there's so much money. There's so much more money in the equities markets right now. Add to that the speed of communication and social media. It's a different market from before. It's a different, what is there, 10x the amount of money in the markets now than there was in 2007? Maybe more. The valuations are going to be higher. I've said this many times before. The valuations of these stocks are going to be higher than they were in the previous market peak by the time we're at $50, $55 uranium, and we're probably going to double that. I just don't know how high this is going to go, but this has got me way, way more bullish. And I think it's important to be choosy about what stocks you get into. I think that it's worthwhile to do some research and to look at some charts. Look at the charts all across the space. It doesn't take that long. There's only 65 companies out there. And you can see there's drastic outperformers. So you can take the shotgun approach. You can buy the ETF, which is perfectly fine, just to get your exposure. But to buy anything just because it has uranium in the name or it hasn't moved yet is really unintelligent and probably not the best way to have leverage. So I think that having some sort of method, as we do with our newsletter, in finding those stocks that are going to outperform is really where you can go from having a 10x return to a 25x return. And depending on what you're putting into the market, that can be life-changing. That can be really good gains versus life-changing and, like you said, retiring in your 30s kind of gains. I think it's important to step back, take a breath, look at the space, do a little bit of digging, have a process, and position wisely into the companies that you think are going to give you leverage and move forward forthrightly with their own catalysts. It's the most important thing that we look for. There's a company out there right now. I'm not going to mention by its name. We don't own it. We did own it. It's really cheap. It's a really good company. And when comparing it, there's another company in the space we do own that is similar in valuation right now. And you can argue that it's overvalued based on it's just a snapshot of their assets and, let's say, the timetable to production and the amount of production that might happen in that timetable. But we have to remember that stocks are discounting mechanisms. They're looking into the future and the market treats them as such. And so some valuation is baking in what the market thinks the company is going to do. Now, with this first company that I think is actually really cheap right now. In fact, it's temptingly cheap. Um, but their plan for the future is known. We know exactly what's going to happen. Uranium gets to X price, they start producing X amount, and they sell it to wherever they can. And that's great. I mean, producing cash flow, having a healthy balance sheet, it matters. But these markets they're just different. It's like valuations don't make sense anymore. And you have to go at least somewhat off of company catalysts and news flow. And a company has to be able to provide that news flow and take these steps during a bull market. And that's really, really what we look for. That's really what has worked really well for us. And that's what I encourage people to do, is not just, oh, they've got this brilliant asset and eventually develop it and eventually they'll produce, which is perfectly fine. But if you're looking for major leverage, then the companies that are going to grow during the bull market is really where it's at.
So if you're looking for major leverage, you want to participate in this uranium bull market, which is getting very exciting. And I want to encourage you to go join Uranium Insider newsletter. You'll see the link in the description and it's pinned to the comments right there down below. So go ahead and click that, check that out. I am a paying member of it. I highly recommend it. And I think that this is one of the more exciting opportunities that we have right now over the next couple of years to, as some people say, beat the suits into the market. And there's really truly incredible opportunities. As Justin mentioned, only 64, 65 stocks. And last time at the peak of the market, there was 400 or 500. And so we've got a long way to go. This is getting very exciting. And I want to encourage you to go to the link in the description right there down below and join Uranium Insider. Want to thank Justin for coming on today. Comment down below, go Uranium go, right there down below. If you comment down, go Uranium go, you're going to actually help move the price of uranium higher using some type of telepathic communication with the spot market. So comment that down right there down below. Make sure you hit the like button on this side or this side to send this video out to more retail investors. I want to thank you for coming on today, Justin. And any final words?
Yeah, thanks for having me. I feel like when I'm speaking about the market right now, it feels like I'm being irresponsibly bullish for the sake of being bullish. And I can't overemphasize how big of a deal this is. This is, in my opinion, the biggest news for the uranium market in years. And we've seen a nonstop flow of positive news for the past 2 years. This is huge. And I think that previous price targets are just thrown out the window. Sprott controls the market now. And if you know anything about Sprott, you know their prowess in the space, the access to capital that they have and will have going forward. It's basically, this is game on. So lacking a nuclear accident, there's nothing really that's going to stop this uranium market and this thesis.
Or if we get hit by a giant asteroid or something like that
Sure,
extincts human civilization. But other than that, you're looking at one of the biggest players in the entire resource world right now that is essentially about to totally legitimately and legally corner the market and get in the New York Stock Exchange. And there's some amazing opportunities. And I do have to say, Justin does have the best uranium newsletter I've come across. Everything from the macro environment, really understanding the thesis of the investment, and then to the nuts and bolts of which stocks are best buys based off valuations, based off a lot of details that, maybe you and I don't normally know, but someone like Justin is going into great depth about. So the link to that is in the description and pinned to the comments right there down below to join Uranium Insider right there down below. And we want to thank you for coming on today, Justin.
Always my pleasure. Look forward to the next time, Jake.